Okay, welcome back. The lesson that we're going to do right now is going to be based on the Hurst exponent. And this is something that many of you have heard of. It really has nothing to do with the market. It has nothing to do with trading. You can use it with the market, but it wasn't created for the market. And what I mean by that is this Hurst exponent was originally created for uses other than the market. It was actually created by a gentleman called Harold Edwin Hurst, and he was actually a British hydrologist, believe it or not. And he studied the long-term storage capacity of reservoirs, mainly on the Nile. And this was like something that he created in order to determine these long-term studies, which has led to many other fields such as, like the Forex market and even cardiology. So if you want to read up on Harold, you can definitely do that. But what he created was more or less this Hurst exponent. And you can kind of think of this as like an index of dependence. Okay, so like this was created for use of telling us if the data that we're looking at and the data that we're observing is strongly regressing to the mean, or if it's going to kind of go in a certain direction. And the Hurst exponent is something that it's not an exact number. Like it's more or less estimated. It's not, because it's created and found in nature. This is something that's estimated. It's not like a precise calculation or whatever. You can come up with an estimate, but it's not like a fact. It's not written in stone. So we can use that for our trading because we want to know if this is going to regress to the mean. A lot of our harmonic patterns are actually at extremes of the mean, and therefore it's interesting for us to know if they are going to come back to that mean or not. And if we have a way of filtering that, or if we have a way of adding confidence to our trades, then that's definitely something that should interest us and something that we should use. Even though it has nothing to do with the market, it is something, because we are studying nature, that we can observe, and something that we can find to be very realistic in the way of using it as a good filter, or a way of incorporating that into our trading plan. So the Hurst exponent, let's just focus on that for a second. So if we were to look down here, you can see here that we have some numbers at the bottom here that go from 0 to 0.5, and then it goes from 0.5 all the way up to 1. And the way that you look at this iBar, which is essentially our indicator, which really isn't an indicator at all, the way that you look at it is you look at this red squiggly line down here and you look at where it is right now. Okay, and the number at where it is right now is about 0.3758. Okay, so anything from 0 to 0.5 is considered to mean that we have a high chance of regressing back to that mean. Okay. And this shows us like a lot of anti-persistence. When we look at the Hurst value when it's above 0.5 to 1, it shows us that there's a lot of persistence, meaning that direction is likely to continue in the way that it's going. So now, how do you place a trade off that? Well, it's not that you buy when it's low, you sell when it's high. That's not what this is telling you. What you want to make sure is, no matter which direction that the pattern is actually going in, that you have the Hurst exponent is showing you anti-persistence, meaning that it's most likely going to regress to the mean. So in this case, you can see here when this little doji was formed, the Hurst exponent was also very low, and this showed us that we had a high chance of regressing to the mean. and that's great information. You can see that when we have persistence going on, that the trend is continuing. Now, you won't want to take trades based off of this. That's not what this is about. What you want to do is use this for some sort of confirmation that when you're in the PRZ, if the Hurst exponent is high, you won't want to take that trade. If you're in the PRZ and you have like a reversal pattern and the iBar is low, the Hurst exponent, that's great news. I mean, that's telling you there's a lot of anti-persistence and that we're most likely to come back to the mean. Now, if we're in the middle and you're at 0.5, well, things are pretty random. So I don't know about you, but I won't want to take that trade. Like, I'm going to look for another one where the Hurst exponent is lower, and that's how I'm going to use it for my filter. So that's a little brief overview on the Hurst exponent and iBar in general. We're going to get farther into this as we go along, but I just wanted to introduce that to you as a way of using it as a filter to look at whether the market is anti-persistent or persistent. Of course, anti-persistent being low, persistence being high, in between 0.5 and 1. That's persistence. We want to look at this and realize that at the point where we're taking our trade and the pattern here, that we either have persistence or we don't. Okay, so we're going to use that as a filter going forward, and you need to get this early lesson on iBar to understand what exactly we're going to try to do. And once again, sticking with, I won't even call this an indicator, but a tool, sticking with this tool, because it's not something that it's found or created for the market, it's found in nature. Using something that's created with nature alongside of these patterns that we now know are in nature, it's a great combination for the two of them to be used.